Did you notice that the fibs from your 5-1 aren't showing up on your large chart? Had nothing to do with your pictures or your questions. I just kind of noticed it, and I know that we'd talked about it before. I'm not sure what changed, but I wanted to point it out so that you could be aware. All right, let's get going. What do you guys say? I'm a couple minutes early, huh? Jumping the gun on you guys. How about that news? I think, Rob, you said there was all that movement in like 45 seconds, right? My buddy sent me a message too, and he's like, dude, Mark, that news was crazy. Guys, that was the news release. And I want to point out two things. The first thing that I want to point out is, holy crap, look at all that motion. You think maybe there's people that are waiting for that news to come in so that they can make a decision. And then the other thing that I really wanted to point out here to you guys is I want you to see that even during these psychotic episodes, our rules are amazing and they're intact. And these fibs are amazing and they're intact, guys. And one of the biggest advantages that Nexgen is going to give you is the ability to see where highs and lows may be, guys. And one of the things we're going to talk about today is how to gauge whether or not they are, in fact, those highs and lows. Kind of a two-part thing there. The first thing is check your news so you don't get caught up in that craziness, guys. Every day I go to forexfactory.com. Good morning, Luciano. Good morning, Steve, Cav. Every morning I check news, and when I see that high impact, I avoid it. I don't trade into it. I make sure I'm not in a position, because what happened this morning is exactly what could happen. It's not guaranteed to happen, but it could happen. And guys, let's be honest. Trading is about having an advantage, having an edge. When you can define what could happen if it's negative, that's a great opportunity to stay out of the market. And that's kind of what our rules are going to do for us. So every morning I check news. Guys, at 10 a.m. we have the University of Michigan Consumer Sentiment. I don't know what they're sentimental about, but I do know that it's medium impact and it could create a little crazy in the market. Everything comes from the Nexgen page, guys. Everything comes from the Nexgen page. There aren't any secrets, and I think that's pretty cool. We don't keep secrets from you guys. I'm going to give you everything that you need today. I'm not going to give you everything, but I'm going to give you everything that you need. Trading doesn't have to be difficult. It doesn't have to be stressful. The hardest thing about trading is doing absolutely nothing. I'm going to tell you that right now. And you're going to train your brain to do absolutely nothing. And we're going to start off by looking at one trade today. And we're going to look at what we call a high probability trade. And this high probability trade, guys, this is the one. This is the best of the best. This is when everything agrees. You're trading with the trend. You have advantages in place. You're pinpointing your entry. There's nothing between you and your targets. Nothing that says the market is likely to stop, guys. This is the trade that typically wins doing nothing. Man, Ron, you're gifted. If that's your talent, you're gifted. That is not my talent. I struggle every day with it. I need to be in a 12-step program for patience. We're going to learn to read our charts. That's the goal today. Let's learn how to read our charts. Let's be able to look at our charts and say, hey, this is what's going on. This is what my indicators are telling me, guys. Becoming a chart reader should be your goal in the beginning. We all want to be successful day traders, but what you'll find is it takes two things. The first thing is you have to be able to recognize advantages, and the second thing is you have to be willing to act on those advantages, and even more so, willing to not act when those advantages aren't present. And again, that goes back to, I believe that is the biggest challenge for day traders, is doing absolutely nothing. When we talk about this high probability trend trade and we focus on reading our charts, guys, you're going to realize that 90% of your day is doing nothing. That 90% of your day is sitting on your hands, waiting for these advantages to come into play so that you can really embrace that 10%, which is going to be actually trading. So for a little perspective, if you're going to spend 6 hours in front of the markets today, you're likely to be active about 36 minutes of it. And if you find yourself more active than that, you might be over trading. Not necessarily, but there's a chance that you could be, especially if your results aren't going with the efforts there. So you're going to understand where the market is likely to continue. You're going to understand where the market is likely to go, and you will understand where the market is likely to stop. Guys, this is our goal from day one, and we do it with this best of the best trade, which is the high probability trade. This is the trade that teaches you to read your indicators, that has the potential to win 70 to 80% of the time. Guys, this is the trade that's going to create confidence through the memory of success. And there's only 3 rules. And of these 3 rules, I'm going to be real honest with you. Once you get a little mastery on identifying momentum, literally will take you 5 minutes. And then you couple that with what we call a clear path, not trading into those likely to stop areas. These 2 advantages that come from the first 2 rules are enough to carry you, guys. These are enough to give you a profitable, consistent trading plan. And you're going to see it in this room. There's people in this room whose sole purpose in life revolves around momentum and a clear path, and they are as consistent as I've ever seen anybody. Your entry area, your 3rd rule, is going to be specific to the high probability trend trade. It is literally going to use precision and define where the trend is most likely to continue, where things are most likely to bounce. So we're going to focus on these 3 rules this morning. We're going to break them down individually. I will teach you how to study them. I'm going to give you a metric crap ton of pictures to look at over the weekend to make sure that you're comfortable with it. And I'm going to remind you that these 3 rules happen on only 2 charts. We're going to see more charts today. And there's a fine line between the right number of charts to get the job done and so many charts that it just confuses the hell out of you. And most of us lean towards the latter. But we're going to use 2 charts for this high probability trend trade, and we're going to let the large chart lead the way. And this is a very important message. The large chart leads the way. The large chart, guys, the big chart, the slow chart, the one that you're not going to see change on very quickly, on the most current bar, it will define direction, momentum, and areas. It's a very broad stroke of a brush, guys, but this is the one that tells you that it's time to look for an entry. The large chart is where your first 2 rules are met, where your first 2 advantages come from, and it really does show the overall opinion of the market. When these rules are met, and notice that I say when they're met, not if they're met, when they're met, you can turn your attention to the smaller, faster chart. And the smaller, faster charts, it refines that broad stroke. It takes this 1 bar and it shows you the inner workings, guys, and we're going to use that breakdown to pinpoint the best of the best entry, to reduce risk, to maximize profit potential. So inside of this 1 bar that's circled in black, all of this is going on. There's a push up against the downtrend. There's a continuation with the trend. And guys, we're going to use this refinement process to pinpoint that area right there, that entry for the highest probability trend trade. Because that's the one that gives you the least amount of risk. And that's the one that gives you the absolute furthest run to your profit targets. And we do this because there's 2 forces in the market. There's the big crowd and the small crowd. And you got to figure out which one you want to trade with or against. Hopefully you're trading with the large crowd, because the large crowd wakes up every morning, eats their Wheaties, and decides which way the market's going to go, where it's going to turn, and whether or not it has momentum. Guys, the large crowd defines direction, momentum, and areas. The small crowd fights the large crowd, but they lose 70 to 80% of the time, which means when you use the methodology, when you follow the rules, when you follow the plan is designed to allow you to pinpoint precisely where their failure is most imminent, and this becomes your entry for the highest probability trend trade. And the cool thing is, if they lose 70 to 80% of the time, guys, you have the potential to win 70 to 80% of the time. Which means 20 to 30% of the time they're going to pull it off, and 20 to 30% of the time you're going to get stopped out because they did. So trading isn't about winning every trade, it's about taking the best trades with a statistical advantage. And there's a path to getting to where you want to be the fastest, guys. We're going to learn the rules this morning. We're going to talk about momentum and clear path, and we're going to talk about that highest probability trend trade entry. This is my first hour every day because I really do believe that repetition creates recognition. You guys simulate, practice. So if you have a trade that you're really good at and you're a live trader, do your thing. But if you're learning something new, if you're incorporating a new trade, if you're working on management, guys, Simulator gives you the ability to do that with no risk. You can't lose money on Simulator. It's like you can't lose your land playing Monopoly, right? So post your pictures in the room of everything that you do. Tell me what you see. Tell me why you did it. Show me what you saw and identify it. Go, Mark, look at this momentum. Can you believe this clear path? Here's my entry area. And all we're going to do is, it's a private session. We're going to talk about what you saw, whether or not you read the indicators correctly. We're going to look at entries. We're going to look at exits, guys. And the whole goal is you and I working together to make it easier and more profitable. So don't practice the wrong trades. It's fun to get lucky. My brother has this phrase. He goes, when you get lucky in the market, it's a short-term victory and it feels good. But it typically sets you up for long-term failures because everything that we do is patterns that are repeatable, that are verifiable, that can be validated, that have been proven to win more than they lose, and that's what we're talking about this morning. So post your trades in the room, guys. Everything you do, show me what you're doing and what you see. Do I say the same thing but different? I love that. Can you tell that I don't have a script, Mike? Some days I'm passionate about one thing and some days I'm passionate about something else, and sometimes y'all's great questions spark me in a totally different direction. I love teaching this class. I hope you can tell. Guys, we're going to simplify this morning. We're going to talk about that high probability trend trade. I'm going to show you a lot of other trades, but I want you to remember that this high probability trend trade, this is really your first trade, not your only trade, not your get-rich trade. This is the one that's going to allow you to see those trades. But we've got to learn what the looks are that we're going to commit to, and not just the look for the trade. We're going to learn the looks that create the trade. We're going to learn the look of momentum. We're going to learn the recipe for identifying that clear path, or whether it's a termination condition. And we're going to find exactly what it looks like to have that entry area. So using the spreadsheet is the second piece of the puzzle to getting you to where you want to be. And this spreadsheet is freaking amazing, guys. And I'm telling you, it saved my life after I blew out $5,000 in a couple hours a while ago when I first started. Because what it did is it forced my brain to begin to recognize these patterns. So your first tab is trade tracking. This is just your trade journal. This is the Dear Diary. Today I went long. I had all of my advantages. It was an easy winner. I want to do this again every day. Or it was, Dear Diary, I got my butt whipped. And I thought that I had momentum, and I could have sworn that my path was clear. But when I presented in the room and I got the feedback from Mark, I got an outstanding lesson on momentum and clear path. So these are the things that I'm going to avoid going into the next one, because these are the mistakes that I made. And that's exactly how you're going to use this first tab. Let me pull up my picture. I got pictures for everything. Taking pictures is awesome, guys. Writing on pictures is awesome. But if you let them go die in the internet somewhere, they're not very effective. So every morning, I do this myself. I think there's huge advantages from it. Every morning, I want you to look at yesterday's trades and I want you to ask yourself two questions. What worked and what didn't work? And what you're going to do is you're going to begin to identify these things that are working great for you. And you're going to begin to identify these things that seem to be stealing your advantages and your victories. And guys, when you do that every morning, you really focus on the day. You're like, oh my gosh, I don't want to do this again. Guys, I'm going to tell you right now, yesterday, I took more early entries than I'm really proud of. And this morning, when I went back and looked at my charts, I was like, holy shit, I gave away $1,000 on early entries. And if I just would have waited for the right entry, if I just would have been a little bit calmer yesterday, I guess too much caffeine, it would have been a different story at the end of the day. And guys, this is such an important part of it. Just set yourself up for the day. Pick one thing to be better at every day. This basic rules tab is where we identify momentum. Momentum is the same thing on every chart. That's it. Strong triggers are strong triggers. So when we talk about rule number one, Know that that translates to every chart. It doesn't go any other direction. And I think learning what it looks like to have the rules met is crazy important, but it's even more important to understand what it looks like when the rule isn't met. And some of my favorite pictures, Ron, in this classroom are you guys taking a picture of the market and saying, hey, Mark, check it out. I didn't have a clear path. I didn't have momentum, and I just chose not to take the trade. Look at the avoider. Look at the loser that I just avoided. Understanding both sets you up to focus on the advantage, and the same is true for clear path termination and entries. Third tab is client trades. This is a plethora of information. In the green section, there's almost 400 trades of you guys using momentum, using path, finding these great entries. They're not all high probability trend trades, guys. A lot of them are medium probability trades. A lot of them have little nuances that maybe the individual client threw into it. But the cool thing is you can go back and study these. And I'm telling you, crack a beer, pour a glass of wine, and just click through all of these links. And there are some dead ones in there. I'm not going to lie. I haven't cleaned it out. But there's at least 350 instances where you can start to recognize these patterns that seem to be bringing everybody that uses Nexgen success. There's the entry sequences for both long and short trades. You win, Ron. There's management. I'm going to introduce you to a management plan that's very emotionless and pragmatic and designed to get you paid. But everything that I teach in this very first hour, guys, is a foundation. You will grow from it. So there's a lot of opportunities and ideas of when to hold for bigger moves or maybe when to not move your stops yet. So there's some management ideas here. And then one of the things that you're going to see as you begin to read your indicators is just patterns. You're like that little kid. You're like, oh, I see dead people. Guys, you're not going to look for them, but you're going to start to recognize them. You're going to start to notice that a second lower divergence does this, or a big gap to the large triggers does that. Start taking those pictures and writing down what you see. Drop them in the room. See if I can help you. And guys, these patterns that repeat, that you start to recognize, these are one of the ways that you're going to build your trading plan, that you're going to find out what really speaks to you and jumps off the page and is easy. And that's where the build the plan section comes in, guys. When you see a pattern, initially it's the high probability trend trade, but when you take the perfect high probability trend trade, when all those advantages are there, take a picture, drop it in here, start building that trading plan. As you begin to venture outside of the very basic management plan, start taking those pictures. And when you see those patterns, start taking those pictures, guys. And I'm telling you, if you post in the room and you give me the opportunity to tell you what you did right and wrong each and every time you pull the trigger, each and every time you see something you don't understand, you will get to where you want to be faster, guys. Trading is not the fastest route to being a great trader. Study, practice, taking pictures, annotating, creating the connection, and making sure that you learn the looks so that they're easy. That's how you're going to get to where you want to be the quickest. Any questions before we start going into rules? It's Friday, guys. I got nothing to do today, so y'all are stuck with me. We're going to have some fun. I'm going to hydrate, and we're going to talk about strong trigger lines, guys. Strong trigger lines come from the large chart. Why? Because the large chart defines direction. The large chart defines momentum, guys, and that's what strong triggers do. They give us the advantage of momentum. So when I wake up, pour a cup of coffee, I'm going to look at that large chart and I'm going to say, what color is the background? Because that's going to let me know which direction I should be trading. So if the background is green, the market is going up. And if it's going up, I should be looking for rules to be met for high probability trend trades long. If the background is red, it's going down. You should be looking for rules to be met for high probability trend trade short. Guys, this is the beginning, the foundation. Going with the trend is one of the easiest things you can do. Funny story, you know Friday is all about stories, right, guys? So a broker called my brother once, this is my brother's broker, and he goes, hey John, Mr. Novak, I finally figured out how to get $1 million in that trading account. And of course my brother's like, awesome, Mr. Broker Man, tell me, what's the secret to getting $1 million in my trading account? And he goes, I've got this all figured out, Mr. Novak. I want you to fund it with $3 million. And then I want you to fight the trend every chance you get. By the end of the year, you should be somewhere around $1 million. True story, but kind of funny. But it reminds you guys, even your brokers know that the trend is your friend. So let's define strength. Strength comes from strong triggers, guys. Playing Uber driver today for your elderly parents? Right on. Good for you, man. Made one trade, done for the day, closing with profits. I love that, Mike. Enjoy your weekend. If you need anything, you know you can always reach out. Good on you for taking care of the parents, man. We'll see you Monday morning. Guys, strong triggers and an uptrend. When the background is green, both your small and large triggers have to be green. That's how momentum works, guys. All the colors match. Your small triggers are going to be up and above the large triggers. Your large triggers will be wide. They'll be angled in the direction of the trend. And I want you to picture scissors that have just opened. Because when there is separation between the small and large, let me get my pen here, and those scissors are open. There we go. Get a little artsy-fartsy here, right? There's my scissors. And it's that space between the small and large that let me know that the odds are favorable for the market to continue up. And in a downtrend, we can do the same thing. When the smalls are below the large, when those scissors are open, guys, you can get some work done when those scissors are open. Those are strong triggers. Strong triggers let me know that the odds are favorable for the market to continue up, for the market to continue down. Odds favorable momentum, guys. You're going to hear it in the room all day long. Pete, that's what I'm talking about. I will pause a class all day long to say hi to your puppies, guys. Love puppy pictures. Strong triggers. What am I doing? Get down there. Strong triggers push the market. Strong triggers can break key Fibonacci areas. Strong triggers can even cover some of the mistakes that we make as new users, guys. Insisting on momentum is an outstanding thing to insist on. But momentum doesn't last all day long, guys. And when those small triggers work their way back inside of the large triggers, when the scissors close, guys, this is a weakening of the trend. This is weakness. And when I have weakness, anything can happen up or down. I'm a big fan of language. I was an English lit major. I think language is important. And guys, if you see this and you say to yourself, odds favorable momentum, create that correlation. And it's going to be easier to commit to your trades that have this advantage. And if you look at this weakness and you say to yourself, anything can happen, guys, let the language guide you. Use those anchor words. They really are powerful in adhering to your rules. And momentum is, it's not on and off. There's the creation of momentum, the increasing of momentum, the decreasing of momentum. And your trigger lines tell the story the whole way. These strong trigger lines are the best of the best. So brand new users, this is your blanket rule. Insist on momentum. But as you grow with the software, as you learn to read your indicators, you'll notice that when one of the lines works its way in, but one is still out, momentum is slowing, but as a chart reader, you're still going to be able to find some opportunities to capitalize. And then once the smalls work inside, guys, that's where weakness takes over. That's where anything can happen. And there will be times where you'll say, man, I still have enough advantages to take a shot at this with weakness to see if I can get to the next area. But you'll understand that it's not high probability, that the advantage of momentum is gone. And then, guys, when weak triggers hit fibs, bad things happen. Big bounces happen. Reversals can happen. Fights can happen, guys. And that's kind of the segue into rule number 2. Making sure that we don't trade into these areas that can stop the market. We call those termination conditions. But I want to ask real quick, how do you guys feel about momentum? Is that a pretty easy lesson for most of you? Because there it is. Strength to the upside, but that fib can still stop it. Strength to the upside, but those one-to-ones can still stop it. Guys, strength is always strength. Strength is always the advantage of momentum, and it looks the same no matter what chart you're staring at. It's a separation between the small and large. And then once you have that momentum, you can't just trade all willy-nilly. You got to make sure that you have a clear path, guys. And the clear path means that you're not trading into a termination condition. And a termination condition All it is, it's a line on your large chart, guys. It's a Fibonacci-based indicator that may stop the market, that may create an untradeable bounce, that may even reverse the market completely. And it's not difficult to recognize. Every time you have a horizontal line on your large chart, I want you to say to yourself, man, this is where that large crowd makes decisions. This is where the large crowd buyers tend to buy, and this is where the large crowd sellers tend to sell. This is where fights can happen and reversals can come true. And guys, it's just a horizontal line. It's a divergence high line or a divergence low line. It's Fibonacci resistance, Fibonacci support, and yellow 1-to-1s. And that's all you need to know. If I see a horizontal line, decisions may be made there. Divergence lines are nothing more. This shows me a loss of momentum. If the buyers are in control and the sellers push hard enough, the momentum doesn't follow, you'll see a pink line, a magenta line. If the sellers are in control and the buyers push harder and steal their momentum, you'll see a blue line. And it's just a little signal that says, whoa, things might be changing. And they act as lines in the sand, the same way resistance, support, and 1-to-1s will. So we're going to use the idea that decisions are made at these lines, and that's gonna make it easy to understand the recipe to define a termination condition, because the first part is price reaches the area. Your dynamic Renko bars reach Fibonacci resistance. Your dynamic Renko bars reach Fibonacci support. That's what sets off the decision-making process, is the market actually arriving at one of those lines. When you get to a line, all you have to do is ask yourself, where are my triggers? And I know this seems way too simple, right? Market can't be this easy. It really is. Price reaches resistance, where are my triggers? My triggers are below resistance. All my triggers stayed below that red line, below that divergence high, below those yellow 1-to-1s. Well, if they remain below, it's a termination condition. It may create a bounce. It may stop the market. There might be a fight there. It could even reverse the market completely. If it reverses the market completely, we're going to call that a strong top. First, it's a termination condition because the triggers don't break. Then it's a strong top because the large triggers roll, guys. And the strong top is the precursor to the highest probability trend trade short you could ever take. Price reaches support. The decision is set off. You guys say, where are my triggers? The triggers are above support. Therefore, support is a termination condition. It could create an untradeable bounce. There may be a fight, and it could reverse the market completely. That reversal from the termination condition is what we call a strong bottom, which happens to be the precursor for the highest probability trend trade long that you can take. It's also rule number one for high volume area trades. It's rule number one for momentum trades. It's rule number one for the white bar trade when you use that range chart, guys. So understanding that a no triggers through termination that reverses as a strong top or bottom is going to pay dividends as you grow with the software. But this is the most important part about this equation. If rule number two is not met, no trades into the area, guys. Fibonacci is where the large crowd makes decisions. And let me just show you. This was during crazy news. This took 45 seconds. And it went from Fibonacci support with no triggers through, or that was actually acting as resistance in the moment, to support with no triggers through, to support with no triggers through, from resistance with no triggers through, to resistance where the triggers didn't break, to support, to resistance, to support, and then finally they started breaking above. And I can tell you that all this momentum breaking the area stopped right at a yellow 1-to-1 that the triggers didn't break. Guys, I want you taking these pictures. I want you going back and studying this, because as soon as you learn to avoid trading into areas, you're doing better than most of the people that have this software, because this is the most broken rule. But areas break. They have to break. If they didn't break, we'd rattle in between two lines for the rest of our lives. An area is not considered broken until the small and the large get to the other side. And guys, when the small and the large get to the other side, your path is clear until you reach the next area. Smalls and large get below support. Support begins to behave as resistance. And you'll see with that momentum, that tail end of momentum, price pulls right back and tests that resistance. This happens daily. Smalls and large get above resistance. Resistance behaves as support. The path is clear. And guys, your path remains clear until you reach the next area. Your path is clear until you reach the next area. And this is a great example of it. Both the small and the large got above these areas. The path is clear, the momentum is strong, and life is good. But when we reach the next area, you've got to start the process over. You've got to say to yourself, I hit that damn resistance. Where are my triggers? They didn't break, even with odds favorable momentum. And sure enough, there's a giant push right back down to support. So I'm going to ask, is everybody good? For the brand new user, these are your warm fuzzy blanket rules. Let it either be a termination condition or let it be a clear path. And if you commit to the clear path and you couple it with momentum, guys, you are 66% of the way to greatness. There's a transition in between termination condition and clear path. This is what we call a 50-50 look. When 50% of your triggers, the small, absolutely smash through a fib, through a 1-to-1, through a divergence high, but the large triggers are lagging. Guys, this shows the potential of an area to break, but it'll never be broken until both sets of triggers are through. I'm going to give you a plan to capitalize on this potential. But remember, it's not a clear path and rule number 2 isn't met. And here's the bummer about rule number 2. Sorry, guys. Let's slow it down and be sad for a second. There's going to be times when your path isn't clear because the areas are stacked. Fibonacci is a reflection of fear and greed. And when there is an enormous amount of fear and greed in the market, you may see support, support, divergence lows. You may see resistance, resistance, resistance. And guys, there's times where you're not going to get that clear path because there's fib after fib after fib. And this is 90% of your day. Rule number 2 is the patience generator. 90% of your day, guys, you just have to be patient. You have to wait. It's not your trade. But the cool thing is the futures markets, guys, they trade on average at $220 billion a day. It takes $400 in your account every day to put you in a 6-figure income based on your trading. That's it. 400. That's not a very big number. And if you spend any time studying the software, you're going to realize that the potential is there for you to hit your goals before 8 or 9 in the morning, and you can just become a professional golfer. You don't have to be in every move. Every tick isn't your tick. Every swing isn't your swing. Every up isn't your up, and every down isn't your down, guys. We're going to use rules to make sure that every time you pull the trigger, you have a statistical advantage, that you're trading a pattern that has been proven to win more than it loses. And rule number 2 is going to keep you out of sketchy situations, guys. This was right before Thanksgiving, when there was a lot of indecision and lower volume. And there were 26 instances where if you traded into a termination condition, you lost money. And there were 6 instances during that same day where the area actually broke. And guys, 90% of your day is doing nothing. Don't let one breaking of a fib convince you that all fibs are going to break, because the 10 behind it are more likely to hold, guys. That's how rule number 2 came into play. So I'm going to ask again, how do we feel about the idea that if price reaches an area and the triggers remain below, maybe we shouldn't trade into it? This is the most current bar, and it went directly to support, damn near to the tick. And look at the market bouncing up off of it. Pretty cool, right? You guys knew about this fib before you ever got to it. The same way you knew about this fib and that fib and those yellow 1-to-1s. You know precisely where the people in control of the market are most likely to make decisions, guys. And now you can make the decision to not trade into it. So, rule number 1, I have strong triggers. Rule number 2, my path is clear. I'm done with the large chart. That's it. I don't even have to look at it anymore. I'm going to turn my attention to that smaller, faster chart. I'm going to use that refinement process to pinpoint the best of the best entry. My entry will be so precise. I love that word, precise. That I'm going to use a limit order to buy or sell a pullback at an area inside of triggers, guys. I'm going to wait for the market to come to me. If my trend is up, I'm going to buy the market when it's on its way down on that smaller, faster chart. And if the trend is down, I'm going to sell that market when it appears to be going up on a smaller, faster chart. Because remember, the large chart is a slow moving freight trade of a chart. So rule number 3 says that I'm going to use a limit order to buy or sell a pullback. That's that little shove that the small crowd creates. And I'm going to buy it at an area, fibs, midbands, and yellow 1-to-1s, But I'm going to insist that those areas are inside of trigger lines. And the best of the best trigger look, guys, is what we call favorable large triggers. And that's when your large triggers and your synthetic triggers on your entry chart are overlapping, one on top of the other, like two snakes riding piggyback. Because one of the gospel truths in these markets on these charts, guys, is that price returns to large triggers. And I just want you to see this. Price bars will break away and they'll come back to the large triggers, and they'll break away and they'll come back to the large triggers. And this happens over and over and over. And what we're going to do is we're going to use that idea that when I know where the large and synthetic are the large triggers from the large chart, when I can identify them on my small chart, I know exactly where price bars are most likely to return. And then when I have areas inside of those triggers, I have something for it to bounce off of. The triggers show me where the price bars are likely to go. The areas inside show me where it's likely to bounce and continue with the trend. And that's precisely where the small crowd is most likely to fail. So we're defining our entry now, guys. We have embraced momentum. We have insisted on a clear path. And now we're going to wait for the small crowd to fight. And guys, your small chart is going to look like this when the rules are met, when you start looking for a trade. But I want you to avoid the temptation of just jumping in the beginning. Because if you just jump in, you're hoping that momentum never gives up, guys. And that momentum gives up on your signal to pinpoint your entry. We're going to wait for a reversal bar, because a reversal bar signals the beginning of the pullback. That reversal bar shows you that the small crowd has started fighting. Once I get that reversal bar, I'm going to identify my trigger lines, large and synthetic. In a perfect world, they are one on top of the other. They are wide, they are angled in the direction of the trend. And guys, these trigger lines define where I expect those price bars to return. But they're not my entry. My entry comes from an area inside of those trigger lines, something to create a bounce, guys. The price bars are a tennis ball and the areas inside of triggers are a brick wall. But you don't know which wall it's coming off of. So we're going to create what we call a window of opportunity, the woo for you Ric Flair fans. Guys, your window of opportunity for a long trade will extend from the highest point of support to the lowest point of support inside of favorable large triggers. And I want you to start embracing that language, and I want you to write that language on your charts when you're taking these trend trades. My trade comes from an area inside of favorable triggers, from the highest point of support to the lowest point of support. But I want you to remember that your large chart is going gangbusters to the upside. Your large chart has insanely strong momentum. The trend is up. The path is clear. Everything says this market is going up. And then there's the fight, guys. And that is why your entry is going to come from the highest point of support, a tick or two above the highest point of support, guys. That is where you're going to place your limit order. And they're either going to get you or they're not. You'll never be in control of that. But we're not going to trip over a couple pennies to save a few dollars, guys. We're getting in a couple ticks above, and anything on the wrong side of those triggers, any line that's beyond those triggers, because remember, those triggers are where we expect price to return, right? Let's do some vandalism on this picture today. Once I identify my triggers, that white arrow is my expectation for the price bars. It can stop at the top, it can go to the bottom, I don't know, but this entire line is precisely where I expect price to go. This first area is where I expect a bounce, but the second area could produce a bounce. And I'm going to be totally honest with you guys, I don't know which one it's going to be. That's why there's a window, but because of the strength, because of the momentum, because of the clear path, I'm going to activate a limit order just above. Anything on the wrong side of the triggers is where the market shouldn't go. If the market makes it below these triggers, below these areas inside of triggers, guys, my advantage is gone. My edge is no longer there. I don't want to be in this trade. So by defining where it's most likely to continue, I also define where the market shouldn't go. This will be your first stop placement, and it's going to be in the plan that I give you. So go in the other direction. Large chart is in a downtrend. Large chart has odds favorable momentum. Large chart has nothing in the way. And we just sit on our hands and we wait for the small crowd to fight. We wait for a reversal bar, that signal that says, hey, here comes the pullback. At the time of the reversal bar, you're going to say, where are my triggers? Where's the large? Where's the synthetic? Because those define where those price bars may return. And do I have any lines inside of those triggers? And guys, if you do, in this case, you just have one, you can create your window. Your window is one tick wide here, guys. But your job is to activate a limit order 2 ticks below it. To say to yourself, with all that momentum and nothing in the way, I hope they get there. Let me cut them off just a couple ticks early. And you're going to remind yourself that anything on the other side of those triggers, anything beyond that correction point, anything beyond that bounce point, guys, your advantage is gone and rule number 3 is no longer in play. And that is precisely where the market should not go, which means your entries don't come from areas on the wrong side of the triggers, because once you blow through that correction point, there is no telling if or where that market's going to stop. This is where your initial stop goes. And guys, that's your highest probability trend trade. I added this into the PowerPoint because I'm in the business of reminding you guys that you're human, that you will make mistakes, that there is fear involved, that there's anxiety, that there's early entries, late entries, and it's cool, guys. It's part of it. These are the 3 most common entries for the high probability trend trade that I see you guys make. The first one is what I will lovingly refer to as the JTFI. The market is going up strong. There's absolutely nothing in the way. And you just can't seem to muster the courage to wait for the pullback, and you just jump the fudge in, right? And guys, I see this a lot. But the problem is, the second you get a reversal bar, your advantage of riding that momentum wave is over. And I see a lot of these, and I see people taking huge losers from these jump-in trades. So if you do jump in, respect the reversal bar. Even better, don't just jump in. The second entry is when it almost hits your order, misses it by a tick, and the market seems to bounce up. And I see a lot of us getting in right at the top of that bar, right at that highest tick point. And guys, you've got to wait for the best of the best. Because 3, the best one, the entry at the area inside of favorable large triggers, guys, that's where you've got the least amount of risk, and that's where the highest profit potential comes in. And if you jump in early, you've only increased your risk and decreased your profit potential. So you've got to understand that your best entry is the lowest entry, right there at the area inside. And if you get a reversal bar in the direction of your trade, guys, that's going to be your first stop movement. You're going to reduce risk below it. Crypto, a partial close. So you're trading 2 contracts and you want to pull one off. Just want to make sure that I'm following you here. And I hope that you don't need it right now in the moment, because I want to talk about one more thing, but I will cover that right after this. Okay, cool. So for sure, do not let me forget. But when we're done with this entry, we'll go through and I'll show you guys. But I want you to study. And guys, I told you earlier that the easiest way to get to where you want to be is taking a lot of pictures. The best pictures you can take are when you have momentum and a clear path, or even that potential to break, and you see one of these tails on the large chart. As we don't trade tails, but you'll be able to predict, to anticipate, to wait where that tail is most likely to form. And that tail is most likely to form in an area inside of favorable large triggers. And this is going to be your study tool. So check this out. Odds favorable, potential to break, there's a tail. Odds favorable, potential to break, actually that one actually broke, there's your tail. And guys, I want you to see what these look like on a smaller, faster chart. So let me pull up that smaller, faster chart, and I'm going to scroll back to that tail. Can you give me a Y if you see that both of those tails pull directly back to support right at the triggers? Pretty cool, right? Good morning, Em. Right back to support. And guys, could have gone to the large, could have gone to the synthetic. You had areas all over the place. If your stop was in the right spot, it was money. If your stop is in the right spot, it was money. Look at the momentum. This one has a clear path. Is Debbie in here today? I don't see her. Somebody asked yesterday, but Mark, what if the colors don't match? What if this is green and my entry chart is red? Guys, this is strong triggers and a clear path. The only thing I'm looking for is an area inside of favorable large triggers. I will never, when we talk about entries, discuss colors. Area inside of favorable large triggers. So this is the high probability trend trade. Welcome to it. Are there any questions about momentum? Are there any questions about termination conditions? Are there any questions about the entry? I'm about to give you anything and everything you could ever hope for, guys. And it's going to start with, not that. It's going to start with this. Chart Reading 101. Take pictures. Take lots of pictures. Guys, you have an entire weekend ahead of you. This is designed to make your chart reading faster. It's designed to make sure that you understand these very basic concepts so that you can turn them into a trade. And in order to get to where you want to be, you have to be able to recognize these looks and patterns quickly, guys. And this is going to reinforce all the lessons that we give every day. It will speed up the process of learning to read your charts, which is going to expedite the process of you finding those next trades. So take 25 pictures of strong triggers and weak triggers and know the difference and commit to the strength. Take 25 pictures of a clear path and of termination conditions. And once again, know the difference and commit to the path. And then take pictures of those entries and know what it looks like to get in at the right spot so you understand where the market shouldn't go. You understand where it's likely to continue. But guys, the task isn't just to take pictures. That would be too easy, right? Annotate your charts. Every time you annotate your chart, guys, you're going to talk about the whys. You're going to say, why are these triggers strong? Well, they're strong because there's separation, because the colors match, and that separation means odds favorable momentum. Rule number 1 is met. And if you do that 25 times, guys, you're not going to miss strong triggers. You're not going to wonder if the triggers were strong. The same is true when you take pictures of termination conditions. Write out the recipe in your picture. Price reached this area. None of the triggers broke through. Rule number 2 is not met. Don't trade into this area. And if you do that for each individual picture, here comes the neuroscience. The time that you spend typing and analyzing and taking those pictures and posting them into your spreadsheet so that you're developing the study guide for yourself, guys, it reinforces not only the look on your chart, but it reinforces the advantage that's had with that look. And when you begin to look at strong triggers, you start saying to yourself, wow, look at the separation. Those are strong. That's strength. That's odds favorable momentum. And you get to the point to where every time you look at your chart, you get vocal. Whether it's in your head or out loud, I think it should be out loud, scare your dog, about whether or not you have momentum and whether that look that you're looking at is a clear path. And what it does is it really helps you commit to the advantages, recognize the advantages, stick to the advantages. And then eventually you're going to piece these together to create a trade. You're going to go through this if-then. If I have momentum, then I look for a clear path. And if that clear path is there, then I will look for an area inside of favorable large triggers. And you'll learn to use that language. Good job, Cav. Only $3,300 this morning? And guys, heads up. Cav started right where you are if you're new. Cav started day 1, asked a million questions, posted a lot of pictures, got an awful lot of feedback, and now he just comes in to say hi and brag, which is my favorite thing in the world. Great job, Cav. From the Chart Reading 101, guys, I'm also going to give you, that's not the one, hold on. I have so much stuff to give you this morning. You too, Cav. I'm going to give you the high probability trend trade checklist. In my career prior to Nexgen, I built checklists for the businesses that I ran, guys. And these checklists are designed to help you get in on the right side of things. So all it is the rules for the high probability trend trade. It starts with, is the market coming from a strong top or bottom? That termination condition that reverses the market, but it's not mandatory. It just kind of sweetens the pot a little bit. Odds favorable momentum. That's what it looks like. That's what it looks like when it's gone. So as you go take your pictures, you have a cheat sheet. Termination conditions are when price reaches an area and the triggers don't break through, guys. And this will always be a termination condition. You can use words like it has the potential to break because of all this momentum when the smalls break. But guys, it's not broken until the small and large are through. So once again, here's a cheat sheet. And then defining your entry. Area inside of favorable large triggers is going to be one of the most important phrases that you could ever write on a chart, because what it does is it keeps you from having to ask, was this an entry? Is this the right entry? All you have to ask is, was it a pullback to an area inside of favorable large triggers? And then you have your answer, guys. So all that's on there for you. And then the second page is a checklist that you can print out, laminate, use a dry erase marker, print 50 of them out, and take your most delicious crayon. And every time you take a trade, make sure that you can mark yes. Because if you can, nobody has ever done worse than 70% following this plan. And the goal is to win, guys. The goal is to take more out of the market than it is to put in. So make sure that you use the language as well. Did I have those odds favorable? Are there no termination conditions? Is there an area inside of favorable large triggers? And if you go through this process, take the pictures, study the pictures, use the checklist, life gets easier and it pulls you to the plan. Having a plan. When you Google to the CME, what's one of the most important things I can do becoming a day trader? Have a written plan, guys. Have a plan that is defined. Have a plan that you understand. Have a plan that has been proven to win more than it loses. And this KISS plan is just that. This KISS plan is a stepping stone in your learning journey, and it's the one that helps you learn to read your indicators, and it's the one that puts you into the trade that has the highest chance of winning, that teaches you to read your indicators. And guys, it's designed to optimize your chances of success with a high probability trend trade as you go through this educational process. And then through simulation, through study, through continuous practice, guys, you're going to create your own plan based on your ability to read the indicators. Crypto, do me a favor. You're going to want to, because I can't diagnose very well when I can't see it, there's the link to tech. Get with Jason. Jason will fix you faster than it would take me to look at your charts and figure out what's wrong. Drop a ticket in. He'll get you squared away. No worries at all. And he'll probably even talk to you about how to troubleshoot in the future. Sorry, I'm not a lot of tech help. I wish that I was, but I'm really not. Morning, Erla. And Em, I see you there. Good morning. So guys, once you can read your indicators, you're going to create your plan. Once you recognize patterns outside of this high probability trend trade, you're going to begin to see the ones that win more than they lose. But in the beginning, let's just define entries, guys. And the easiest way to get to where you want to be is don't fight the large chart. Don't fight the momentum. Don't fight the termination conditions. Let the large chart tell you that it's time to find your entry, and then find it, guys. Get in at the area where the market is most likely to continue, because what that does is it defines where the market shouldn't go, and that's management. And that's what you have to do after you enter. And I'm telling you right now that great entries create very manageable trades. Great rules-based entries give you the least amount of risk. Rules-based entries give you the highest probability of the market going in the direction of your trade. And these great entries, guys, this is the cornerstone for the management plan. And your management plan is very emotionless. It's 100% if-then, and it's designed to get you paid ASAP and to show you where to put your stops to protect you where it's appropriate and not fear-driven. So this very mechanical management plan is dependent 100% on your ability to recognize your entries. So guys, let's focus on entries before management. Let's focus on process before we start chasing profits, because once you can define where the market is most likely to continue, you understand completely where the market shouldn't go. This is your first stop placement, 4 to 5 ticks below that lowest point of the triggers, on the wrong side of the triggers. And you've got two options here. One of the options is the 20 to 30% of every high probability trend trades that you take, guys. And that's where the small crowd pushes through everything and hits your stop. And I want you to be okay with getting your stop hit, when you're taking the right trades. And I want it to piss you off to no end when you get stopped out because you broke rules. And I want it to piss you off enough that you start following your rules. So if they don't hit me, if they don't catch my stop, that means they gave me a reversal bar in the direction of my trade. They have confirmed that this market is going up with the trend, up with the momentum, and up with the clear path. And guys, once I get a reversal bar in the direction of my trade, my new stop is 2 ticks below it. I've reduced my risk. I haven't guaranteed a winner, but now if it turns against me, it's a smaller loser. And guys, losers are a normal part of a positive equity curve. Jim T, I see you typing in there. Did you get my message from yesterday? I want to make sure that you can post in the room. I guess so if I see you typing. Guys, I'm either stopped out for a smaller loss or it's going to go to my first target. And in the KISS plan, your first target is $100 away from your entry. That's it. It has nothing to do with areas or anything. It's just $100 away from your entry. Because if you are entering the market at the bounce point with all the momentum in the clear path, this one gets hit a lot, guys. And that first target makes you feel good. You're learning how to get paid. You're learning that you don't have to make $400, $500, $600 on every trade, every contract. That $100 feels good, calms you down. And this is where you're going to move your stop to break even. So you have zero risk on that trade and you just got paid. And life is good and children are singing songs about you. And you're either going to get stopped out, break even, which really doesn't sting very much, or it's going to go to your second target. And your second target's only $200 away from that entry. Which means that if you take the highest probability trend trade, if you enter where the market is most likely to continue, and it goes $200 away from that outstanding, amazing entry, ladies and gentlemen, that is a $300 trade. $300 in your pocket. And the cool thing is that $300 is $75,000 a year. That's what that is, based on 252 trading days a year. $300 is $75,000 from one trade that goes the distance. But the reality is, guys, is that that one trade, that's not going to be it. I'm looking for that one. $400 becomes pretty easy. It really does. Once you understand a couple things, $400 is pretty easy. You're going to see the potential to get yourself up here, and then you can start using those things like trade copiers. And a trade copier lets you mirror one account on the next account, which means if you can make $100 a day flawlessly and mirror it on 10 accounts, guys, now you're making $1,000 a day, which means now you're sitting around $250,000 a year from the same high probability. So being successful isn't necessarily taking more trades, guys. Rather, it's taking the best trades. But the one thing that I want you to realize that you have to do when it's time to go live, guys, we're going to use Simulator to test. We're going to use Simulator to be able to practice, to make sure that we're good at it, to make sure that we understand the rules, to make sure that we're not fearful, that we have a management plan. And then when it's time to go live, there's two things that you have to know. You need to know why you're going to enter. And guys, your entry rules need to be based on patterns that have been proven, that have been tested, that have been verified and validated to win more than they lose. Because if they haven't, the reality is it probably shouldn't be in your rules. And then you have to know why you're going to exit. And all an exit condition is, it's either target reached or advantage gone. That's it. Your chart reading will let you know when it's appropriate to exit, but you need to write a plan and define it so you can be consistent. Every trade that you learn has different entry rules. Every trade that you learn has different exit rules, which is why in the beginning I encourage you to keep it simple. Give yourself 3 things to think about on 2 charts, right? Learn those rules. Learn them until they're easy. And then once they're easy, guys, add another trade. I'll be here. I'll help you with every trade you want to take. So my promise this morning was that I would give you everything that you need to be successful, guys. I even named the zip file, everything you need. This zip file has the KISS plan. That plan that has been proven to win more than it loses, that teaches you exactly how to enter and exactly how to exit while you learn to read your indicators. That KISS plan is in there. Your high probability trend trade checklist is in there with the looks that you're looking for. Daily goals is in there. Exit conditions are in there. Guys, there's even a checklist in there for all the trades that you're going to learn after the high probability trend trade. Inside of that zip file, there's also the PowerPoint that I use to teach every day. And guys, all of these files are both Microsoft Word and PDF, so there's no excuses to not have the study materials. You now know the rules. You have the ability to simulate, and I'm here 15 hours every week to give you feedback to make sure that your chart reads are correct, that your entries make sense, that your management plan is giving you the most out of every trade with the least amount of risk. Your job now is to study, to ask questions, to participate, and to make sure that you're putting yourself in a position to understand what it is you're looking for. And guys, I'm going to give this and then we're going to take a little break because I think breaks are important. Let me find it. There we go. Guys, the key to this is having a foundation. And I discovered this word online and I love it. Kaizen. It's Japanese. I'm probably not saying it right. But it means focusing on small improvements every day and not waiting for big improvements, but trying to become 1% better every day. Instead of setting up a big goal, guys, instead of trying to be a master day trader as you learn this stuff, maybe become a master at momentum and then become an expert at termination conditions and then become a superstar at the perfect entries. And those little improvements every day turn you into a day trader, guys. Tackle each one by one, compound, grow from that foundation. So for all you new users, I blanket with very conservative rules. We focus heavily on recognizing advantages, using that word advantage because it feels good. And I give you a solid plan that optimizes your chances of success as you learn to read your indicators, guys. So for all of you new users, termination conditions are bad. No momentum is bad. Areas beyond the large triggers for entry are bad. These are blanket rules. These are very big generalizations because it increases the likelihood of success, guys. And you could build a trading plan that is profitable and successful by just remaining under the blanket. Now, these things aren't always bad though, and you'll realize that with some experience, guys. The more experience you have, the more you'll know when the exceptions make sense. I was talking to a buddy of mine yesterday, and it's one of those old cliches, right? Learn your rules like a scholar so that you can break them like an artist, guys. And breaking them isn't necessarily breaking rules, but it's creating more rules, new rules based on your ability to recognize patterns. And then the more time you spend with this, guys, the more you're going to see, and it's that foundation that opens doors. So learn the process that yields results, and the results seem to follow. Focus on the execution. Don't worry so much about the result in the beginning. That's where the KISS plan comes in. If you keep it basic, follow the rules, and if you're okay not trying to keep up with the people that are already ahead of you guys, you're going to find an extraordinary level of success, and I've watched it repeatedly over the years. The further new users deviate from simple, the longer they take to learn how to be comfortable with pattern recognition. This is a gospel truth. And then the final message here, guys, question everything. I mean, question everything. Not like defiant, Mark, I think you're wrong, and that's okay too if it's done respectful. Question everything. I don't understand momentum, Mark. I need another lesson. Mark, I can't seem to get these entries. I need you to go over that again. And I promise you, I'll do it. I'll do it. I don't have a script or a schedule. We can take as long as it takes to make sure everybody's on board. And one of the things that new users say is, well, I didn't want to monopolize time. I didn't want to take up the class time. I didn't want to keep asking questions because I was afraid everybody in the room would think that I was monopolizing. And guys, I'm going to tell you right now, F everybody in this room. Be selfish. You should believe that it's only the two of us and you have the opportunity for these private sessions. Nothing like having to shut down everything, scan and reboot after the cash market opens. You think God is trying to tell you something? That's God telling you follow your rules, Ed. And He's reminding you that if that's as bad as it gets, then you're all right. So guys, Be selfish with the time. Use the lessons, take the lessons, study the lessons. You're in control of your success, guys, and you'll get out of the software what you put into it. So I'm going to leave you with the S&P, and the S&P went up, didn't it? Pretty cool, right? And it pulled right back to areas inside of triggers. And when I come back, we're going to start looking at charts, the charts that you guys have posted. And I'm going to go back on each and every one of those charts because this is an educational room. And we're going to go back to momentum, path, and entry. On all of them, no matter what kind of trade it is. Momentum, path, and entry. And we're going to talk about the good, the bad, and the ugly. And if there's something that can be improved upon on your chart read, we're gonna come up with a plan to do it. If there's something that can be improved upon on your entry, on your exit, we're gonna talk about it, guys. And it really is a private session. Every time you put a picture in there, we're gonna talk about it. So Jim, first time poster. So let's see what happened. I love this. Jim, I love this, and let me tell you why. One, you told me that you had momentum, and you were spot on, which means that we don't have to cover the lesson on momentum. You got it. You also recognize that there weren't any termination conditions, which means that you and I are cool on rules 1 and 2. That's not where you need help. But Jim, the one thing that you didn't do, and let me show you, and I love, oh man, watch this. Jim, were you in here for the entry lesson? No, I said Jim. Don't make fun of my speech impediment, Jim. That's not cool. So, Jim, the window of opportunity extends from the highest point of support to the lowest point of support inside of favorable large triggers. I think it's important that you guys learn that language. And it's not a huge difference, but your entry should come somewhere about right here. Which means, compared to this entry, it's about 4 ticks less risk, and it's about 4 ticks more room to the profit potential. Does that make sense? That'll be the first lesson on this chart. This is an outstanding freaking chart. So, this is okay. But Jim, I think that your early entry had a lot to do with why you put your stop right there. And let me guess, 12 ticks? Yep. So Jim, this is where defining where the market shouldn't go would have turned a $150 loser, well, a $300 loser, into a $300 winner. And let me show you why. Because every day when I teach the lesson on stop placement, your initial stop goes 4 or 5 ticks below those trigger lines. Because that's where the market shouldn't go. And Jim, that's one of the reasons that great entries create less risk. And then once you get the reversal bar, you can reduce risk a little bit. But what you did is your stop is literally laying, and watch how language comes into play. Your stop is at support inside of triggers. And that is the precise definition of where an entry comes from. So learning these very basics changed your whole trade. Does that make sense? And I know that it's hard to leave 12, 14 ticks on a trade, but that 12 ticks, that built-in ATM strategy, Jim, isn't where your stop belongs. You just self-analyzed? I like that. So if I went short right now real quick, and let me put it on the KISS plan. Just hypothetically, if I went short right now, this is 12 ticks, and it's right at resistance inside of triggers, it would have to be all the way up here. So I know what my risk is long before I ever take a trade. And guys, this isn't a real trade. I'm going to close that out. But I can define my risk before I ever get in. And guys, great entries minimize risk dramatically. They really do. And Jim, your picture is the perfect picture. And guys, this is exactly how this classroom works. Put it in, talk about what you saw, show me what you did, And guys, if there's a better way to do it, my promise to you is that we're going to find it, talk about it, and come up with a solution together. So I'm going to go take a break. I'm going to refill my water. And when I come back, we're going to start looking at the rest of the pictures. And guys, I'm going to remind you that this is your classroom. But not my voice or troubleshooting. Okay, cool. Let's see if we can help Marty real quick. So Marty, right here, mute music. We'll see if that gets them. And guys, this is for all of you. If you ever can't hear me, and we know everyone else can hear me, sometimes you gotta reset Discord, kill it completely, come back, and usually that clears it up. So I'm gonna be back in 5. So no sound. I'm gonna type that in there so he knows when he comes back and he doesn't think that it's that I'm not here. So I'll be back in 5 minutes, guys. When I come back, we'll start clicking on charts. We'll talk about advantages. And man, flood it with questions, guys. There were so many great questions yesterday. I want you to keep them coming, especially you new guys, because you can't be new and not have questions, right? It's impossible. I'll see you in 5, guys. I did not unmute for that second hour. All right, I'll unmute for the third hour, but there's going to be a big hour gap where my voice isn't there. Clearly, I'm sleepy too, Crypto. Sorry. Um, Ed, you're in 7, right? Cool. So you don't want 8 range large trigger on it. You just want 5-1 dynamic Rinko. You don't want the 8 range large trigger on there. You got it? Cool. M, what's the recipe for a strong top or bottom? No triggers through what? Okay. So we had a divergence high. That's not a termination condition, right, Em? That's just a loss of momentum? Yep. So did price reach an area and reverse the market? It didn't, did it? So is it a strong top? Nope. Perfect. Absolutely perfect. Does it mean that the market can't go down for 8 days? No. But it's not a strong top, so if your rules require a strong top, your rules weren't met. I love that though. I love that you're asking, and I like even more, Em, that you know the answer. You just want to talk to me, and I appreciate that. You knew the answer. Which means that even though you're new, you're learning, we just proved it. All right, Morgan, we're going to fight. I just want you to know this. Let me make it so that I can read it. Not a strong top, Morgan. And we just went through it. And let me talk about why. So, Morgan, you're like, dude, it was close, right? And these are areas. Are you with me, Morgan? Are you managing a trade right now? Okay. So this divergence is a definitive line in the sand. These yellow 1-to-1s are a definitive line in the sand. There is no areas involved with them, like tick above, tick below. They are a 100% precise number. Your fibs, on the other hand, because they are the love child of 10,000 calculations to create that one line, a tick short's cool, but not with the divergence. So technically, it's not a strong top, which is okay. Smalls are down strong, but your large are still above. And what got you in? Pull back to the HVA. There it is. Pull back to the HVA. Did you have 3 divergences up top? Something to make it a termination? That's just buying a pink or selling a pink line. Is really what that is. That's just selling a pink line. And that's okay. You gotta make mistakes. It worked, didn't it? Let's look at it. It worked. Stop kept you safe. But that's okay. It's all right. Because you're thinking the right way, right? You were thinking about it being a strong top, even if it wasn't. You're thinking about the triggers rolling. You're thinking about selling an HVA line because the triggers rolled. You're going through the thought process really well, Morgan. You're breaking it apart the way it needs to be broken apart. But remember that the HVAs don't come from down here. This is more of a trend trade. The HVAs typically come from up here. That was your HVA. And because of the gap theory and all of that, it wasn't real successful. You didn't get what you needed there so much. But true HVA trades, actually that's after it happened. That was after your retest. That's your trade. If you were going to do it, your trade is somewhere right here, but the triggers are up. And they never really rolled down. They were against you coming into it. I like it. I like the way you did it. So you just decided to piece it together on the second shot after the HVA. And it's kind of a super ugly trend trade going off the idea that it was a strong top. But I think that your thinking was totally right, totally in line. So even though I'm kind of poo-pooing that HVA trades don't come from here, the whole idea behind it, yeah, no worries. You're making good decisions. You're going through the thought process and you're focusing on rules. They're jacking with you. 8 points. Why would you enter there, Ed? And if you were so sure it was going down, why did you exit? Have a reason at least, right? Like, have a reason. They're not jacking with you. They don't even know you exist. Okay. Then, all right. So I'm going to show you guys something. We did this the other day, and it was kind of fun and kind of funny. Let me get all the drawing stuff off of here real quick. And let me get these make-believe entries and exits off of there real quick. I'm going to show you guys what traders do. And I know I'm not the only one that's done this. Hold on. I couldn't find a rule to be met to save my life. I never hold for more than 3 ticks because I crap my pants from fear. But I totally missed this. This trade I should have never been in. And wouldn't have held anyway. And why do we do that? Because it makes us feel smart. And Ed, I'm not saying this is what you did. But when you use hindsight to decide what you missed out on, when you use hindsight and you can't find a rule met, but you're convinced that that one time, even though you jump out of every trade that you get into when it starts to go your way, you're convinced that this time would have been the time that you would have held. And you're convinced that this would have been the one. And Ed, this is where you wanted to enter. Why on earth would you pretend that you wouldn't have exited with that? Because now you feel like you missed this giant move that you would have never been a part of. And I've looked at your charts long enough to know that you would have been out for 2 ticks when this fluctuated and you would have never re-entered. So don't put that on yourself. Just needed a win. I had odds favorable momentum and a clear path, so I jumped in at the area inside of favorable large triggers and won. Holy crap, Ed. Beautiful trade. You didn't just need a win, brother. You needed to stop taking the iffy trades and wait for this one. And this was easy. I bet this one was effortless. I love it. I love it. Ed, this is your trade. Who cares? You got paid and you took the right trade. But Ed, you didn't hold for the real target because you got scared. Which means, my friend, that you sure as hell didn't miss an 8-point move. Because even when everything's freaking perfect, you jump ship. Because you don't trust it. Ed, if you really can't afford to lose anymore, you have to stop trading because you will lose. Why don't you say this? Try this language. I have to stop taking avoidable losers. I have to stop taking losers that don't fit the rules. I have to stop cutting winners short. So instead of saying that you can't afford to lose, because that's absolute crap. If you can't afford to lose, you can't afford to day trade, guys. Just plain and simple. If you can't accept losses, you have no business in this arena. But what you can do is start avoiding the avoidable losses. You can stop taking the ones that don't fit the plan. And then when you lose, who cares? Because most of your trades win more than they lose. And my apologies for sounding soapboxy, preachy, getting on your ass. But guys, this is perfect. Odds favorable, potential to break, right back to resistance inside of favorable large triggers. And nothing has changed to make you get out of this trade yet. You haven't gotten a divergence. Your small triggers are now in the direction of the trade. Hell, if you jumped in right here, your expectation with this particular look until something changes would be down around Fibonacci support. But jumping in really late really isn't the good idea, right? Because the best entry was up here where my stop is hanging in a very precarious place. So if I just jumped in, my stop had to go all the way up here, and that's too much risk for me. But if you took the right entry, if you follow the rules, if you followed the plan, guys, the plan has you in around $99.75, which means $97.75 is $100, and you're already break even. You're already break even on this medium probability trade, and you have money in the bank. Sorry, I got my Reverend collar on today. I don't mean to. Two things you have to know, ladies and gentlemen. You have to know why you'll enter a trade. And then you've got to teach yourself to commit to having that entry met. And then you have to know why you're going to exit. And the second you abandon your plan that has been proven to win more than it loses, you open the door for emotion. You open the door for fear. You open the door for feeling like you have to win. And guys, the second you decide that you have to win, the second you decide what the market's going to do, that's it. That's the end of the game, guys. Because when you believe you know what's going to happen, you set yourself up for failure. And when you take a loss. Anyone other than me done this? This one has to go, and then you get stopped out, and you're like, oh my gosh, it had to go, and it didn't. And now I have to take it 3 more times to prove that I'm right, because my ego is huge. That's an autobiography there. And when you don't care what happens, because you're taking a trade that has been proven to win more than it loses, guys, it takes all the stress out of trading out. And it's the collection of 20 or 25 trades. And when you make every trade life or death, trading is hard, guys, and all there is up and down ticks. And emotional pain comes from what you believe. The market isn't out to get you. The market doesn't care about your position or your bills or your wife being mad at you or your husband upset with you, guys. All it is up and down ticks, and you create your own pain based on it. So I like this one. The 4 fears are being wrong, losing, missing out, leaving money on the table. Those are the 4 fears of trading. And if you focus on your fears, you cause them to happen. You guys ever heard of target fixation, where you run into what you're looking at? Pilots fly into the sides of mountains. Motorcycle racers ride into trees. Because you go where you look, guys. So if you don't predetermine your risk for each trade, you got to know what you're getting into, right? Trade with your stops. Define the reasons it may work. Define where your analysis may be wrong. Momentum and clear path should carry me, but my analysis could be wrong because X, Y, Z. Accept the risk. And why would you hesitate if the rules are true? And that's the one that I like. If your rules have been proven to win more than they lose, why would you ever hesitate if your rules are true? Why would you ever change direction? Why would you say, oh, maybe I shouldn't take this trade? It's because you don't believe that your trade wins more than it loses. You haven't spent the time to do that study. And I'm telling you guys right now, the more trades you try to take without rules being met, the more you're going to create challenges for yourself. The more you're going to escalate fear and sorrow and all those things that are self-imposed. So I'm going to pass the collection plate. I hope that makes sense to you guys. I hate it when Fridays get preachy, but every now and then I get triggered from a word. Every now and then I get triggered. I must be a millennial. No offense, Em. So let's go through it. What direction is the trend on my large chart, guys? Give me a U or a D. Are we going up or down here? Jeffrey, play along. Is the market? It's going up, yes. Do I have strong triggers? Let me define it before you answer. Are my small and large triggers both green? Are they wide, angled in the direction of the trend? And is there space between the two? What do you guys think? Do I have odds favorable momentum? Absolutely. Jeffrey, guess what? I don't need the large chart anymore. So now I have to say, with this reversal bar, where are my triggers? And I want you to see this. There's the top of my triggers and there's the bottom of my triggers. That's huge, and price may return to either. Well, price is already at these, so let me come down here. If I'm really going to take a trade, I want to come back to an area inside of triggers. If I choose to take a trade right here, my stop, the only place where I can put my stop that's where the market shouldn't go, is down here. So Jeffrey, you can get in early, but your stop belongs down here, or you could wait for it to hit the area in the triggers, and that's less risk, and that's more room to get to the fib. And these are the things that you start to work through, where you're like, oh my goodness, what if it doesn't come get me? Well, then it's not your trade. Does that make sense? But that's how I go through each and every high probability trend trade that I'm looking for. It could bounce off the mid-band. It might. So check this out. My entry's not perfect. Jeffrey, this is what I'm going to say. This is my best entry. This is potential. So if I get one of those reversal bars off of the mid-band, I'll enter the trade. If I don't get confirmation right at that area, then it's going to have to come get me at the lower risk area. It's going to have to come get me at the area inside of triggers. So should we play this one out, guys? Let's see what happens. I love this because this is what day trading is, guys. My pattern says XYZ. And Jeffrey, here's one. 1, 2, 3 divergences in the same location may terminate the trend. 3 divergences in the same location is every bit as good as hitting a fib, which means that I have to cancel my order because now I don't have a clear path. And I'm not coming from a strong bottom, and this is only the potential to break. And guys, this trade is less likely to work if I'm not coming from a strong bottom. This trade is less likely to work if I don't have a clear path. And that goes back to the KISS plan. But Mark, you were just about to get a trade and that was so stinking exciting. Yeah. But this trade doesn't have a clear path. This trade is a 50-50. Which means that I need a strong top or bottom. Which means that I can't have divergence. Which means that even though everything in my gut says, go long, Mark, it's green. If I do so, I'm breaking a lot of rules. How do we feel about that? But what if I say to hell with my rules? I think it's going to go up. If I get a confirmation bar, I'm taking it. Nobody can stop me, right? Nobody can say, Mark, you can't do that. Guys, I'm alone. I'm an island here. I'm all by myself. I'm the only person that can make that decision. I'm the only person in control of whether or not my rules are met. And as much as I want to be in a long trade, and as much as I want to go with that momentum, and as much as I hope that that momentum clears that potential problem, I'm going to stick to my rules. I'm going to follow my rules. Because my rules have been proven to win more than they lose. All right. Cav coming off a termination, smalls below the large, but every indicator says up. And guys, I love this. Yeah, so Jeffrey, 3 divergences in the same price range behave as a termination condition. And you'll see it on the small chart first. And a lot of times it shows change you can't see. Guys, I want you to see something. Termination condition directly into a termination condition. And when it hit down here, do you notice how nothing changed on those triggers? We saw this earlier. Cav said, wait a minute. Once everything kind of agrees and I'm coming off a termination, this is just a cool little shot to continue. And he did it beautifully. So Jeffrey, let's watch it. Let's see what happens. 3 divergences in the same price range can behave as a termination condition. And I'll go to the user guide here so that you can see it. Maybe I need to put this back in my slideshow. It happens on big charts and little charts. So you can see it on a huge chart or a small chart, Jeffrey. But because there's so much price action on that small chart that's inside of 1 bar on a large chart, a lot of times you'll see 3 divergences. And check it out. If I do that square around the 1 bar trick, well, I guess it was 2 bars, but 3 divergences, a lot of fluctuations. And this right here to me says, man, that's not my best chance of success. And because the large triggers aren't above support, that's not my best chance of success. And because this isn't a termination condition off the bottom, that's not my best chance of success. I'm breaking a lot of rules if I choose to take a long trade. And we'll see what happens. Because a lot of times when I don't come from a strong bottom, it's a pivot kind of from the middle of nowhere. Jeffrey, very often those sellers are trying to get to that fib. And the buyers are trying to stop them. But look at this. The buyers have been trying to stop them for how long? Oh my gosh. The buyers have been trying to stop them since that termination condition reversed the market. And the sellers pushed and the buyers fought. And the sellers pushed and the buyers fought. And the sellers pushed right to the next area and the buyers fought. The sellers pushed to the termination. The buyers fought. Right to a fib. Seller said no. Buyer said yes. Seller said nope. We want that fib. And then when they got there, they weren't done. The buyers tested the water, but the sellers took over. And the buyers are testing the waters, but the sellers are taking over, and man, the sellers aren't giving it up. And that's been happening for the last 2 days. There's been a lot of fights, but that's one of the reasons why we try to piece together all of the advantages. Because that's a lot of strength to the upside. But there's some problems, there's some inherent challenges going on. Weak bottom, 3 divergences. My large triggers are down, but my synthetic triggers are up. My range chart says odds favorable momentum to the downside. That doesn't feel like my best chance of success. Does all that make sense, Jeffrey? And all of this comes back into chart reading. And I want to show you something cool about these fibs. We did this one day and I never really realized it. But when we were coming up to this level, let's talk about what happened here and why 3 divergences in the same price range can be so powerful. Right here, the sellers said, hey, let's see how much resistance the buyers are going to give us. And guys, maybe they put on 100 contracts. And they said, you know what? Let's test their resolve. And when we do that, we'll put on another 100 contracts because we know what we're going to do up here. And then the buyers, let's let them try one more time, think they got away with something. And then let's go ahead and take our total position to 300 contracts. And then let's push freaking hard to go back the direction we wanted to go. And what they're doing is they're literally testing the buyers to see how aggressive the buyers are going to be on their push up. Are they just going to blow up, or is it going to be easy for them to change the direction? And you see stuff like this happen when you start getting close to termination conditions. As you start getting close to fibs, you can see the buyers testing the sellers and the buyers testing the sellers to see what they're going to do. And you can see the sellers and the buyers testing one another. And it's awesome because when you start thinking about it, it starts to make more and more sense. And now we're at that decision-making point. And what does my chart say? Well, my small chart says down, my range chart says down. Both of these have odds favorable momentum. And I don't really have a clear path as I come into this decision-making area. Maybe long trades aren't my best chance of success. And that's it, 3 divergences in the same price range. And we're going to see how it works. We're going to see what it does, Jeffrey. And sometimes learning to trade is just a product of taking a picture and analyzing what you see. Did that make sense? I hope so. And that was for everybody, guys. There's going to be a lot of times where there's not shnikes to do. There's nothing to do. But there's going to be looks on the large chart that fill your heart with hope. I hope it goes up because my triggers are up. I hope this area holds. And you'll get caught up in that moment. Look, there was a mid-band. But you've got to do your chart reads. What is the trend? The trend is up. What is the momentum? The momentum is up. Do I have a clear path? I don't. Well, if I don't have a clear path, divergence is a killer. And if I have this magical range chart, odds favorable momentum against a trade is a killer. So instead of just arbitrarily getting in on a reversal bar, you say, holy crap, this isn't good. This chart's not perfect. This chart's worse. This chart screams doom and gloom. Maybe the long isn't what I want. And then Morgan's like, wait again. It's rolling, 3 divergences, termination, white bar, pull back there. Morgan's like, I go short, right? At the HVA? And my stop goes above that? Because Morgan's toying with these white bars and HVAs right now. And he's not factoring in this right here. That everything is up and you shouldn't fight strong triggers. You're already in that trade? All right. So you know where your problem is, right? Your problem is right here. So you say something clever like, you know what? If it gives me an up bar, I'll be out of it. But because of, Morgan, watch this. Because of the bad bottom, because of the 50-50, because of the 3 divergences, because of the odds favorable momentum, patterns tell me that this thing may push down. I'll give it a shot. And if you got in a tick below the HVA, you have 2 ticks of risk on this trade. And if patterns really do hold true, well then maybe I'll put my second target down here. Guys, there's nothing high probability about this. But if I incorporate my chart reading, if I take the time that I've spent reading indicators, and if I take the patterns that I've recognized from that time that I've spent, and I take the feedback that I've gotten from my personal mentor about what the market may do, well then maybe this doesn't seem as far-fetched. I still don't fight strong triggers. But I have to ask myself, is taking that trade in my plan? And the reality is it's not. Because my most important rule in my life, guys, is I don't fight strong triggers on the large chart. I just don't do it. I've fought them 1,000 times and I've lost 900 of those 1,000 times. And you would think that I'd say, wow, Mark, maybe that's not your best bet. But damn it, guys, I'm smart. And it feels good when it works. We got a few minutes. Anything you guys want to talk about? Watch this. Somebody sent me a picture on the sly. Let's critique his chart. What do you say? Price cleared. Went up. Rules 3 and 4 met. Just didn't work. Like it. Didn't work. What's the one thing missing on the large chart? Jen, help me out here. Is that my best look for a momentum trade? So should I type that back to him? No, I said Jen. No. All right, so we'll make him answer the question. And I know it seems silly, but Mark, there's a line out. But Mark, it's going up. But Mark. Guys, if you're going to take a trade based on momentum, make sure that there's momentum on that chart. And before you say, nice, Ed, good job. And before you say, but I won. It's like my least favorite thing in the world. But I won. All right, are you going to win with that look tomorrow? That's the question. Are you going to win with that look more than you lose? And that's what we're looking for, right? And Jen, this week has tested the ever-loving crap out of everybody's patience. There have not been a lot of great moves, but there has definitely been enough moves for people to get paid. There's been enough move for everybody to make money. But it's been a tough week, guys. There's been a lot of fights. But there was opportunities to make money. I know there was because you guys have shown it to me. And if you took the 50-50 with no divergence at the area, divergence is your exit condition. Pretty cool, right? You have to know why you're getting in and why you're getting out. And it gets easier every day if you do the same thing every day. You guys ever play golf with the guy that every time you meet him, he's trying something new? Well, I was doing this with my swing last time and it didn't work, so I changed everything for this time. And it didn't work. So next time I'll change it again, and then I'll change it again. Or you can change one thing, right? So some of you, your thing to change Monday is don't trade in termination conditions. That's it. Make that your only goal. Don't trade in termination conditions. No, Ed, he still had to learn to play golf. But he learned how to play golf, and then he could change because he knew how to be successful no matter what he did. So some of you on Monday need to not trade in termination conditions. Some of you need to not buy or sell every green and pink line. Some of you need to know the difference between a trend trade and a momentum trade and the expectations so that you can make more money. Some of you need to remind yourself that entries come from areas inside of favorable large triggers. Some of you need to remind yourselves that luck tends to run out. And some of you need to remind yourself that early entries aren't great. That one's mine, guys. Took the pullback into the triggers. So there's your termination. There's your small rolling. There's your pullback. And typically it's the large triggers where you see it. Great trade, Cav. Nice one, Cav. Termination. Small triggers roll. And look for your opportunity. Typically, Cav, these get real close to those large triggers because those large triggers are essentially doing the job of the small triggers here. And it's that pullback to it that gives you that rock star look. But you knew that and you got in and you took advantage. I like this one. Nicely done. And then Ed, that's exactly the trade that you wanted to take earlier today, right? And see how it comes in a little bit closer to that termination? Makes it a little bit easier. And the large chart wins. Don't fight the large chart. Yeah, so I don't take that short because I don't fight strong triggers. But I don't take that long because I don't take 50-50s from bad bottoms against 3 divergences. So if I can't take the long or the short, what do you guys suppose I should be doing? Have a beer. I wish I could still drink beer, Jen. Cav, guys, Cav just gave you the keys to the kingdom. Here's some free advice for all newcomers. Burn into your brain the 3 rules and you can't go wrong. Thank you for that, Cav. I don't disagree. If you always go back to the 3 rules and you always talk about them every trade you take, it doesn't mean that you have to take a high probability trend trade, but if it's perfect, you're holding, and if it's not perfect, you're managing. And that's really what that foundation does for you. And there's a million opportunities. A million opportunities. All right, and the feedback we got from the guy that sent it on the side, he goes, nope, I didn't have strong triggers. That was his reply when I said, is that your best look for a long or for that style trade? But on his chart, and guys, this is a good lesson. Price clears. Well, that's only part of it, right? Has anyone ever done that? You choose not to type in the other rules, the ones that you're breaking. Trade in the morning, that will keep you profitable. So Cav, I will disagree with that because 90% of my trading is done after this classroom. So I will disagree with that. Respectfully, of course. 90% of my trading happens after this classroom. And the NASDAQ moves amazing. Crude oil tends to be garbage. But the NASDAQ moves amazing in the afternoons most days. I'm not sure about the S&P. Because I'm with you, beautiful people, during the morning sessions. Yeah, crude is garbage generally. But the thing is, though, is there's that morning, though. If you're a crude trader, the morning is amazing. Because it opens like 2 a.m. Well, yeah, if you continue trading, you get that Superman complex, right? I'm invincible, or I'm bored. I wish I would have had more trades, but I didn't. Yeah, and no, I don't disagree with that. Cav, I would almost say don't trade more than 3 or 4 hours, right? Give your brain a break. Guys, there's a reason that I take breaks in this room. It's not just for me, it's for you. You should stand up and walk away too. Back in the restaurant business, we had a new area leader that's like, if you guys have to work 14 hours, you have to work 14 hours. And I almost got fired because I said nobody's worth a damn after 10. Stop telling my staff that. Yeah, see, I don't have a life, Cav, so I guess that's why I can do the NASDAQ in the afternoon. I will, once the funding company opens. I'll be 70, 80 hours a week and I'll finally be happy again. And there you go. Pick a goal, hit it, move to sim. Me too. I'm so excited. My brother, I believe he's finished the programming for Market Flow. So we're turning TradingView in crypto. This is going to be cool for you. There's about 18 platforms that you'll be able to use with Nexgen's funding company. Where's the market? So John's been doing the programming because I'm functionally retarded when it comes to programming, but he's been able to program divergences and one-to-ones in the Keltner channel, and he's been working on the market flow, and he's trying to make this look almost exactly like NinjaTrader. And let me show you the picture that I woke up to this morning. That's the picture that I woke up to this morning. This is TradingView, and this is NinjaTrader. And he's getting really, really close. Nope, 34.5, Rob. 34.5 and 13.2. Those are your Renko charts for NASDAQ. Nope, you won't be able to use NinjaTrader for the prop firm. But the other thing that's happening right now is John's building a platform. He's building his own platform, the Nexgen platform, that will pretty much be identical. Pretty much be identical to NinjaTrader. And this is the browser base. So you can take your iPad, put on your favorite bikini, go to the beach, and make some money. Me too. I'm super excited. Super excited. I'm tired of playing all this golf in the afternoon. I want to work. What else? I guess that's it. Oh, come on, Ed. Got to get that hammock rocking in Europe. I think that's it, ladies and gentlemen. That might be the day. That might be the day. And then now it's the weekend. Anyone get bummed that it's the weekend and they can't trade? I do sometimes. I get excited Sunday evening for trading on Monday morning. Do a little study this weekend. So you guys that are new, go take 5 pictures each of strong triggers, weak triggers, termination conditions, and clear path, and go circle some tails and look for those entries. Just don't, because there's no pressure to win. Just go take pictures. You'll be amazed at how much smarter you are Monday morning. My email works if anybody needs me. You can DM me in Discord, but I don't typically check it on the weekends a whole lot. Apex is starting its own platform. Right on. There's a lot of them out there, Gary. It's okay. We're still going to be the best. We're still going to be the best. Anybody that lets you get a $50,000 account for $18 doesn't really want you. When did you do it, Em? And are you sure it was me and not some scammer? I don't have anything pending, and I don't have anything from you, so I'll show you because I'm a liar. I really am. But I don't have anything in here from you, and I don't have anything pending. So I would never ignore you. And Rob, I replied to you. I don't. I have OCD. When I see that little one, I have to reply. Rob, you replied to on Thursday the 5th at 6:48 a.m. is when it came back, and it said, "Good job following rules." I like it. It's starting to come together for you. You're starting to think about things in terms of advantages and of the rules that give you those advantages. So I'm sorry you didn't see the reply, but it was all props and praise, my friend. All props and praise. So Em, I just DM'd you, so now we started that up, and I don't know, there's some other guy named Mark that's like, I don't know who this M girl is, but she sure is swell.